How's it going, everybody? My name is Antonio, and I am on the barbecue today on September 6th with John Miniotis, the Chief Executive Officer at Abrasilver, which is a precious metals exploration company with assets in Argentina and also in Chile. Who's not here with us today, though, is your financial advisor. This is going to be, this conversation is not going to include any recommendations to buy nor sell anything. It's going to be just a talk. It's going to be a casual talk between two people who you've likely never met. So for as far as you as a listener or a viewer are concerned, this is going to be a conversation that's general and impersonal in nature, as well as a conversation that will include no financial nor professional advice of any sorts. And it's definitely not one that you would want to use as independent research, because it's also going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. I would recommend, although I said there's no recommendations, I would still recommend you to pause the video right now and read the full warning that is on your screen right now, because this sector, the mineral exploration, development, and mining industry, is among the highest risk industries out there. So if you care about your money and you don't like losing it, please do more research and be careful. Visit the company's website, analyze its official filings as well on etc.com, and consult a professional investment advisor before taking your own decisions in the end. That all said, Abrasilver is a 175 million Canadian dollar exploration company that trades on the TSX Ventures Exchange under the ticker symbol ABRA, where an average of about 407,000 shares a day have traded over the last 90 days. Split over 563 million shares outstanding. That makes this a 30-cent stock with a 52-week high of 47 cents and a 52-week low of 25 cents. Fully diluted, there are about 609 million shares with 21 million warrants, some of which are in the money right now, about 6 million of which with a strike price of 10 cents. So they might be exercised sometime between now and next spring. And then there's about 25 million options that are also in the money at 25 cents. About half of the company, so 45% to be specific, is held by strategic investors, including a 12% ownership by Eric Sprott. Roughly 30% is in the hands of institutional investors, and 3 to 4% is in the hands of management and board. There is no long-term debt, and at the end of last quarter, there was about $1 million in current liabilities, mostly account payables, that is, but there was about $11.5 million in current assets, almost $7 million of which was hard cash and $4 million in term deposits. But I'm assuming there's a bit less cash right now after recent drilling activities, but we'll be talking to that. Company's main focus right now is the Diablilos project in the Puna region of Argentina. That's about 160 kilometers from the city of Salta, and it covers about 80 square kilometers of land. This is an advanced stage exploration project that has seen over 120,000 meters of drilling, and there have been over $50 million spent on it, which has resulted in an MRE being completed late last year and a PFS being expected there in the second half of 2023. Right now, on one of the zones, the main zone, if you will, this will be the Oculto zone. On that one zone alone, the company has 51.3 million tons of 66 grams per ton silver and 0.8 grams of gold in the measured and indicated category, resulting in 109 million ounces of silver and 1.3 million ounces of gold. In the ground, that is, of course, which they hope to mine in an open pit setting with a sort of a heap leach method of separation, if you will. More specifically, by the way, Oculto is a high-sulphidation epithermal silver gold deposit, which was allegedly formed about 60 million years ago as sort of hot water from the volcanic and magmatic activity from beneath the ground started moving around and depositing, if you will, well, in this case, gold and silver all over the place. And so for this zone specifically, for the Oculto zone, that's made of, if you count it in value, that's made about 50% silver and about 50% gold, give or take. Next to Oculto, so still on the same project, the Diablilos project, Abra has recently made a new silver bias discovery. So this one is not 50-50. This is about 90 to 95% silver here on what is called the AgEq zone, where the company has just completed and announced the final set of drill results of the phase 3 drill program. That was a few days ago, which returned hose-like 64 meters of 148 grams per ton silver. That is from 41 meters of depth, And there are other narrower holes like 50 meters at 93 grams per ton, with the lowest grades that I could find here being 4 meters of 32.2 grams per ton silver. And they're hoping for a maiden drill resource to be put out on this zone in late 2023. So again, an aggressive timeline here. There also appear to be other zones on this project that are currently untested. So as the focus has been obviously on these two zones that I just went over, but that's something that I hope we can discuss in this interview in a few moments as well. Beside Diablilos, the company also holds the option to buy the I'm going to try pronouncing it, but I'm probably going to fail. But La Coipita project in the San Juan province in Argentina as well, where they made a new copper discovery by drilling 226 meters of 0.34% copper actually, and there's also some gold and some moly in that drill hole as well. There are a few other projects. As I said, there's also some stuff in Chile that we're going to be talking about, but I feel like now might be a good time for me to shut up already and welcome the CEO, John. Thank you for investing your time with me, sir.
Antonio, thank you very much for having me. Excellent, thorough introduction. Much appreciated.
The pleasure is all mine, of course, and I tried giving you a fair introduction indeed, but what am I missing? What am I forgetting or getting wrong here in the overview?
You know, you covered the vast majority of it. I mean, for sure, our, Abrasilver, as you mentioned, we're a high growth silver gold explorer. Just quickly, the key project is Diablilos. It already has a large measured and indicated resource base there. Up till recently, all of the drilling was focused just on one main deposit, Oculto, which, as you covered there, has now about 215 million ounces of silver equivalent resources in the measured and indicated category. But what's really changed for us, quite a transformational year we've had now, is we've discovered a new zone that's called the Jack Zone. We've completed drilling there. Expect a very, a significant resource to be announced very shortly here on that. And then we'll be announcing a pre-feasibility study on the entire project, which now consists of 2 pits. And then looking forward, there's significant potential here for additional pits here. So this has really transformed into one of the highest grade near surface silver deposits out there in the hands of a junior here. And we're very excited about the future upside potential here, I would say.
Well, so far you've basically been a successful exploration company because you went there, you had a thesis, you drilled, you found something, right? That's sort of what makes an exploration company. And you're now hoping to become a development company or not. That's sort of what I'm thinking about. Like, do you want to be the one building and operating the open pits here? Or do you hope to be taken over, or are you maybe looking for a JV partner or something? I don't know.
Yeah. So the current management team is extremely lean. So there's 5 of us in total, and we're suited right now to continue to be sort of an advanced stage explorer. So we're, the current management team is fully capable, obviously, of making high-grade discoveries and then putting out pre-feasibility studies, et cetera. And so we don't have internal expertise on building, constructing, mines, I would say, but that could obviously change. And so we could look to either merge with somebody or bring on additional resources, both human resources and financial resources that could enable us to eventually become a developer. But I'd say right now, we see a lot of value here for years to come on the exploration side. So, if you're buying Abrasilver, you're buying it for the exploration success. You want us to continue to be exploring, advancing, de-risking these projects. And then over time, I mean, we'll see if eventually we sort of transform ourselves and look to build this, and then you become a developer. But that's not where we're at this stage. We're clearly an explorer, and the goal here is to continue to advance the Diablillos project forward by de-risking it and by, of course, continue to explore and making these excellent discoveries as we've been doing for the past couple of years now.
But so you're not actively out there trying to find someone to buy, part of the Diablillos or the whole project off of you right now?
That's correct. That's correct. I mean, as most public companies out there, I mean, we have confidentiality agreements in place. Yeah. And so, to some extent, those discussions are constantly, going on in the background. But certainly, we're not looking nowhere near these levels. Would we be looking to actively engage in a strategic process at this stage?
Well, I guess everything is for sale at the right price, right?
Exactly. As any publicly traded company, I mean, you're publicly traded at the right price. You know, it's up to the shareholders if they want to tender their shares. But yeah, we're nowhere near those prices at this stage, I would say.
Okay, so it is I mean, it's mostly a price thing, a price issue, if you want, for you. But it's not. I mean, it's not necessarily an exploration issue where you want to find more and sell it in bulk, or how am I thinking about it? Because I'm thinking about obviously a potential exit. If you step in now and you ride along with Abra, how do you
Sure.
exit? When do you exit? That's sort of the thing that I'm getting after.
Yeah, yeah. No, so management's goal, of course, is to continue to add value for shareholders. And so we have a clear path ahead of us on how we're going to achieve that. And so obviously we've been drilling this new Jack zone. We've had great success there. We can obviously talk about that in more detail. And so now we're updating the resource estimate. We'll be announcing a resource estimate very shortly in early October. So less than 4 weeks from now, I would say. So that should come out. And then the pre-feasibility study will help give a sort of valuation basis there. What's this project worth just on these two deposits alone? The main Oculto deposit and this new Jack deposit. And so that really sets a benchmark. I mean, this project is worth many multiples of where the current market cap is just on Oculto alone. Now with Jack into the mix, I mean, it's increased even further. And then for next year, really the focus is continue to drill some of these other high priority targets. We have at least 3 others, potential deposits that are, looking extremely promising. And so we're going to be looking to test those as well as, the broader land package. I mean, there's even more targets out there. So for us, it's, how do we add the most value? Is continuing to do what we've been doing, advancing, exploring, de-risking the project. And then, yeah, again, as you mentioned, ultimately, when it comes time to develop this and build a mine, decision remains to be made there. I mean, do we build it ourselves? Do we become developers? Or, do we then look to entertain M&A discussions in more detail?
So how much money is that? What you're walking me through here? How much money do you think that's going to cost you for the rest of 2023 as well as 2024?
For the rest of 2023, the burn rate's going to reduce significantly. So really the vast majority, I mean, now the drilling's completed, that phase 3 drill program. So that was done over the first 3 quarters of the year. In the back half now, it's just calculating the resource. And then less than $1 million, I would say, is remaining to be spent on the pre-fees. So the pre-fees is very well advanced. We've been advancing that all year as well. It's sort of in the final stages of engineering. And obviously waiting for the final resource inputs as well. So I'd say, in terms of the remaining of this year, it's going to be a negligible amount of money that we need, $1 million or so, to get to the pre-feasibility study level. And then next year for the phase 4 drill program, that's where we're still looking. How big do we want this program to be? We have a number of targets out there, but it obviously depends on market conditions. You don't want to be drilling, have a record exploration program when the market is not rewarding that. So that remains to be appropriately sized based on market conditions and based on the cash availability that we have. At the end of Q2, we've had $11 million Canadian in the bank. So we're in a good cash position here, with obviously a number of catalysts ahead of us.
Okay. Yeah, and that was, as I mentioned, the end of Q2, that was like 7 cash and 4 in a term deposit, I believe, is what you had. Is that
but like a GIC? It's just so you get higher interest rates. So yeah, it's essentially cash. Yeah.
Well, what do you get on that, by the way? What's the interest rate you're getting on that $4 million?
We locked that in earlier this year. Yeah, probably 4.5%, something like that.
Yeah, that's not bad. It's just out of interest, actually. But okay, but so that would mean, depending on the market conditions, if the market is good, you're gonna come out with a big drill program basically for next year. But it's gonna mean that you're gonna be looking for a capital raise, or do you think that the warrants that might come in are expected to cover it all? What do you think?
Well, yeah. So for next year, depending on the size of that exploration program, there could be a capital raise, obviously, to justify that. The warrants that we have that are in the money it's a small amount. So there's not a huge amount of warrants out there. I think there was 6 million warrants at 10 cents.
Mm-hmm.
So $600,000. That's not a huge amount. And so, yeah, no, I'd say again, for us, we're fully funded to get to that pre-phase, to commence the phase 4 exploration program for next year. And then, yeah, depending on market conditions, again, we could either upsize that phase 4 program or keep it small and then look to selectively drill some of these targets instead of,
instead of a large drill program all at once. Yeah, it makes sense. Yeah. Well, it makes sense. It depends on the market too. And I understand that it's about, in this sector, it is about share price. Oftentimes I would watch these interviews of generalist investors and saying, oh, well, the share price doesn't matter as long as the business is doing good. But in this sector, it is quite a lot about share price. And this brings me to what I've been thinking about you is how you plan on keep on financing this thing, because that's an interesting topic to me, specifically because of the number of shares outstanding that you have. It's getting up there. There's over 500 million now. So I guess, is that something that you'll be paying attention to, looking for capital? And do you think that you have more available options for financings after the PFS, or how do you look at that?
That's right. Yeah, no. So we have all the options available to us for sure, as most companies at our stage. As you get closer to the PFS study and you have a more advanced stage project, there's more opportunities that open up in terms of financing. So yeah, we could be looking to bring in a strategic shareholder, looking to take, again, a bigger stake in the company. So potentially a strategic investor could come in with, say, a 10% stake in the company. And that's one option. You can look at convertible securities. I mean, there's a whole bunch of options that we would evaluate. Again, we're not actively evaluating any of these right now. The focus is we're fully funded, so we're looking to continue to come out with these catalysts before we start looking at some of the available opportunities. In terms of the share count, at the end of the day, it's the market cap that matters. I mean, we could easily announce a 10-for-1 rollback and have 50 million shares outstanding instead of 500, and the share price goes up 10 times. But yeah, at the end of the day, your market cap's going to remain the same. We've been extremely conservative in raising cash, I'd say, over the last few years. And so we've really only done one raise since mid 2020 when the sector was hot. And all our raises have come at, significantly higher prices than prior raises. And so we did a raise last year in December. That was at 37 cents. We raised $10 million. We kept that very small. We had appetite for more than $25 million at that time. Wanted to minimize dilution at those levels. So raised 10 million. And with that, we've had a remarkably successful year. I mean, that program has allowed us to drill at Jack. We've come out with some of the highest grade, drill results over significant thicknesses here consistently over the last year. And again, now we'll be able to update the resource and the pre-feasibility study, all with that $10 million raise. So yeah, no, we've been very, very prudent, I would say. The reason for the high share count is when we started. So I took over running the company in January 2020. There was through a merger of another company I was running called Aethon Minerals. And at the time of that merger, we already had well over 250 million shares, I believe, outstanding. And so we should have probably, in hindsight, done a rollback at that time just to clean things up. But yeah, since then, I mean, we've been very, very conservative on doing, only doing raises at the right time and for the right reasons. I mean, we're not just raising money and then not advancing the project. We're putting the money to good use every single time we've done a financing. And that will continue to be the case going forward.
That is not a lie. I want to say, because I think I saw you presenting somewhere, and I believe you made a ratio of how much money you'd spend versus how many ounces you had found. That's right. What did that come out as? How much did you spend per ounce found?
Well, I think it was 12 cents. So based on the last 2 years, so phase 1 and the phase 2 drill campaign, which we did in 2021 and 2022, I believe it cost us 12 cents per ounce. So for every 12 cents, and that's per ounce of silver equivalent. But that's in the measured and indicated category. We don't even count inferred ounces. We've significantly grown this deposit over the last few years. And that was just drilling at the main Oculto zone. So at Oculto, back in 2020, when we took over, there was 730,000 ounces of gold and 80 million ounces of silver. Over 2 years of drilling, we doubled essentially the gold, contained gold there in the measured and indicated category. We now have about 1.3 million ounces of gold. And we've gone from 80 million to 110 million ounces of silver. For the money we've spent in total, we've spent less than $10 million drilling at Oculto, and we were able to add 75 million ounces in the ground. So very, very efficient campaign. Now those figures will get updated. So for the past year, we've drilled our phase 3 drill program, cost us about $8 million. And we'll be announcing the resource estimate again next month. So then we'll be able to do that calculation. But I expect it's going to be industry leading once again. It could potentially be better than 12 cents even. So we've had 3 consecutive years now of adding significant number of ounces at minimal cost.
It'll be interesting to see to pay attention to how that number evolves and how it evolves with other companies too, because this is also part of the thesis of commodities, right? That we've gone through massive underinvestments over the last decade, and we're just, it's costing us more and more money to find these ounces or these pounds whenever it's about copper, for example. So I'll be paying attention to that. Are you somewhere in your calculations accounting for potential legal expenses here, maybe as a measure of risk management? Because where I'm coming from, if I'm not mistaken, is that project is located between 2 provinces that have in the past had disputes between who's actually responsible for the permits and all that.
Yeah, again, that's been a long-standing issue that was cleaned up really several years ago. That was cleaned up probably in, I think, 2018, so maybe 5 years ago. There is a boundary dispute between Catamarca and Salta, which affects a number of lithium projects nearby us. And those lithium projects are actually in construction right now. They're going to be producing shortly. And it impacts our Diablillos project as well. The thing is, 5 years ago, we've always had the concessions on the Salta side. Salta was the first province that granted these concessions. And then there was some private landowners that picked up concessions on the Catamarca side, which we acquired like 5 years ago. So for the past several years, we've had the concessions on both sides. So no matter where that border is ultimately drawn, it's us that owns it. So we're essentially in a dispute with ourselves. There's no dispute there whatsoever. So we clearly own 100% of this project. The Salta and Catamarca provincial governments are, again, very mining friendly here, both of them. And they've always come to terms. So we get in these lithium projects that are in the same situation, have agreements in place where, no project has ever been stopped because of this. And so the provinces come into agreement, say this will sort of be the revenue split of the royalties, et cetera. And then for us, same thing. We don't expect any issue there whatsoever.
Good stuff. Okay, what about, so that's basically now that we're talking about the local situation there, that's basically the local governments of the 2 provinces. What about local support, as in like the actual people around it? How's the support for an open pit in Argentina?
Excellent. It truly is. So where we're located, so we're up in the Puna district of Argentina. So it's a dry, very arid environment. And our project's located up 4,000 meters elevation. And so there's really the nearest village, and it's a very small village of about 100 people or so, is located over 100 kilometers away. I think it's maybe about 120 kilometers or so to the north of us. And that's the nearest one. And they're really there for mining. They're there for the lithium projects that are under construction all around us. And of course, they provide support to us as well. And so there's no nearby communities. There's zero alternative land use here. It's a dry, sort of arid environment. There's no agriculture that grows up at that elevation. And there's no alternative land use here whatsoever. And so when you look at us, actually, when you look at our corporate presentation, we show a map of where we're at. we're immediately surrounded by 4 lithium projects that are under active construction. And these are some of the biggest lithium projects out there. So POSCO's one owner, Tibet Summit, etc. So some very well-funded parties that are building these large lithium projects. And those are all advancing. And really, in terms of permitting, that's done at the provincial level. That's the case in all of Argentina. And again, SALT has really fast-tracked all of these permits. The EIA approvals have come in a very timely fashion. And so the government of SALT has really fast-tracked approvals here in order to continue to expedite the investment that's been coming into this region.
The altitude is obviously an interesting thing because you said over 4,000 meters above sea level. So it's rather high up in the mountains. Maybe you can talk to me about what the challenges are related to that, because I oftentimes see it online, people saying, oh, it's a good deposit, but it's number one, it's in Argentina. Number two is like 4 kilometers up above sea level. So what are the challenges of being that high up?
Yeah, I mean, for us, so we drill year round. So really, I mean, in some other cases, if you're up in the Andes, let's say at 4,000 or 5,000 meters elevation, you'd get significant amount of snowfall clearly during the winter season. And so you might have to shut down drilling for a couple months of the year. That's not the case here. Again, so we're in the Puna region, very little precipitation. It's sort of on the other side. So, on the Chilean side, near us, you'd be near the Atacama Desert, one of the driest places in the world. And so we're up sort of in a desert-like environment, but obviously still a high elevation. And so for us, we drill 12 months a year. There's a small amount of snowfall that we would get during the winter. It doesn't really impact our drilling whatsoever. Of course, the contractors, the local employees are all used to the elevation levels. And so the camp is at about 4,000 meters elevation. That's where they sleep when they're at site. For them, they're 100% used to that. So no issues. I mean, for somebody just to go up there, you would want to check your oxygen levels, make sure you're fine. I mean, you wouldn't obviously want to run a marathon at that elevation level. But I've been up site several times. There's absolutely no issues. So it gets you obviously need to get adapted as you acclimatize up at that elevation level. But from a business perspective, there's really no issues for us. And again, all these lithium projects being built are at similar elevation. There's other projects. Fortuna Silver has the Lindero Gold project, or the Lindero Gold Mine. Again, slightly lower elevation, but around the 4,000 meter mark. So no issues, I would say, from a practical standpoint.
Where are they getting their water from, by the way, all those mining projects?
Yeah, so there's an abundance of water here. So for us, we've done drilling on a number of aquifers, and we have easements in place. So we've identified for us water for up to a 9,000 ton per day throughput. And so I think there's either 3 or 5 wells for us that would supply all of that fresh water. And again, the water comes off some of the higher mountains there. And so, there's a significant amount of water availability, I would say.
And then labor force, you say that the town is far away, but that the people are used to. Are those people coming from like, are they locals? Where are they coming from?
Yeah, so you would drive. I mean, Salta is a huge city, hundreds of thousands of people. Salta would be a 5-6 hour drive to our project, but we have a camp at site. So for us, when you go up to camp, typically our workers do shift work. They stay up there for 2 weeks at a time, so 14 days. So they'll stay at the camp for 14 days when they work, and then they go back to Salta or some of the nearby larger cities where they live. Some of them do live in the nearest village, which again is 100 kilometers away. So that's quite a short commute. But commuting on average, I'd say they drive in 4 to 5 hour commutes for them, and then they spend a couple of weeks at site and then go back.
Okay. So where I'm coming from with all these questions, by the way, John, is that I was looking at the chatter online about Abra, and someone said, it's all great, but it's in Argentina, and so I'm trying to figure out what people mean by saying all that. And one thing that obviously pops to mind is inflation. So how inflation's not, I mean, it's been through the roof. Obviously, I think it was like 100% a few years ago. It might be even higher still. How are you dealing with that? How's that affecting you?
Sure. So the inflation, of course, is measured in local currency terms. And so when you look at the price on a peso basis, that devalues significantly. Now, for us, and I assume most mining companies in Argentina, we don't hold any of our cash reserves in pesos. I mean, we hold all our cash that we have on our balance sheet in Canadian and US dollars. And then we transfer money in as needed. Now, the value of, the peso devalues on a regular basis as well. And so when we measure inflation, we look at it on US dollar terms. What does it cost us, on US dollars to be drilling? I'd say for us, it's been about 10%, 10 to maybe 15% for some items, inflation per year. And so 3 years ago, we had all-in drilling costs of about $340 US dollars. That includes drilling, lab, getting back the lab results, all of that, camp costs, etc. So 340 US dollars, that was 3 years ago. Now it's closer to 400 US dollars. And that's, 3 years later. So yeah, obviously there has been inflation, just like anywhere else in the world. But I'd say it's been relatively, in line with, I'd say, most jurisdictions out there. But yeah, in peso terms, I mean, the inflation has been hundreds of percent, but the peso is devalued, and so you get much more pesos for every US dollar you bring in. So which is a huge offset to those Argentinian inflation numbers. So yeah, no, there is inflation just like everywhere these days, but it's been very manageable for us.
Good stuff. I would have thought actually that the altitude changes your price quite a lot more. I would have actually expected it to be higher.
So again, that's the difference. There's others. So if you're drilling up in the Andes, so in the San Juan province where you have these huge copper porphyries, your drilling costs are significantly, it's double that, maybe even triple that on some occasions. It's just much more remote. I mean, there you're taking helicopters in or whatever. I mean, for us, there's a road that connects to Salta, so you drive everything up. When we have the camp at site, and so yeah, no, it's very, very reasonable, and that's why we're able to achieve that 12 cents discovery cost. I mean, for every 12 cents we spend on exploration, we add an ounce of silver, because this is quite easy to get to, and the costs are very reasonable, I would say.
Yeah, well, I guess the geology that you're working with helps as well to get to keep those costs lower, of course, on a per pound or per ounce basis in your case. Let's maybe talk about the geology actually here. As I said at the beginning, Diablillos is a high sulphidation epithermal deposit, and so the high levels of sulfur, that's basically what high sulphidation means. They can sometimes challenge recoveries, and so, but for Oculto, you're working with a 73.5% recovery for silver and an 86% recovery for gold, if I'm not mistaken. Even higher than that for the Jack discovery, because you think you can do a gravity circuit there as well to extract most of the silver, if I'm not mistaken. But those, I mean, isn't that ambitious? I mean, how do you think that's gonna evolve when you go into the PFS? Do you think that's gonna come out lower? Are those maybe too ambitious assumptions? Talk to me about that.
Yeah, no, so there's been a significant amount of metallurgical test work that's taken place over several years now, especially at Oculto. Oculto is a bit more complex for sure, because there's a lot of gold there, and the silver grades are much more variable. I mean, there's really a high grade zone of silver at Oculto, and that's in the measured category, where the average grade's about 100 grams per ton. And in that zone, you get higher recovery. So in the high 70s, maybe even low 80s in some cases. So good recoveries. But then beneath that, once you get into the higher grade gold zone at Oculto, which has good gold grades, you get into silver grades, which are closer to about 50 grams per ton. So quite a bit lower. I mean, the silver grade drops by about half there in those zones. And that's where you'd get the lower silver recoveries. And so that's only at Oculto. At Jack, the mineralization is much more straightforward, much more uniform. There we've done, I think we sent 14 samples there to a lab recently. We press released that back in May. And the silver recoveries at Jack would be between 86 to I think 93%. So very, very high silver recoveries there. You can also recover a lot of that came from that gravity separation circuit, which we're now looking at if that could be applied at Oculto in some cases as well. But so yeah, metallurgical test work. I mean, there's still some trade-off studies taking place. If anything, I think we think the Jack numbers are very recent. We would expect those to remain unchanged for the pre-feasibility study level. And then at Oculto, looking to sort of find opportunities to bump up the silver recoveries there. And, if we could use gravity separation, that would certainly have a meaningful impact. So those studies are underway and, of course, will be completed before the pre-feasibility study is announced.
I guess the deposit would still work if let's say, for those assumptions that you're telling me here turn out to be, let's say, 10 or 20% overestimated. I guess it would still work, right?
Yeah, I mean, so the PEA study was based on just Oculto, and that used already 73.5% silver recoveries, which we think is conservative. I mean, we expect those recoveries figures to improve. There's no reason they would go down 10 or 20%. I don't see any indication of that. So yeah, I mean, the risk is if they did not improve at Oculto, then it'd be the same as stated in the PEA study, where we had a 30% after-tax rate of return. We had a $470 million net present value there, Canadian. And so, yeah, the deposit works based on those studies. We're looking to enhance that, obviously, as much as possible. For Jack, again, silver recoveries are going to be significantly higher. And so that's going to get incorporated, clearly going to add a lot of value, I would say, to the economics.
The PEA was what? Beginning of 2022, right?
That's right.
Yeah. What prices did you run that at again?
So it's $24 silver and $16.50 gold. So yeah, I mean, we'll obviously update those prices now. I mean, looking for gold, obviously, we'll likely use a slightly higher gold price. Silver, not sure if we'd use those same levels or maybe slightly lower.
Yeah, well, gold's quite a lot more higher since then. Silver's kind of struggling here and there. It's I believe it's still below 25 today, or it's pushing there though, but it's trying. What about what are we talking about the geo-wise? Oh, we didn't talk about strip and dilution. Obviously, we would have to wait and see to know for sure with the PFS. What's sort of the feeling here?
Yeah. So Oculto does have a higher strip ratio. So I think it was about 3.7 to 1 maybe in the PEA. And that's because as you go out towards the northeast, the mineralization actually stays at the same horizon, but the elevation gets steeper. So you're going up a hill. And so there's a bit more waste there. And so that was included again in those numbers. One of the potential opportunities we're looking at evaluating is if there could be a heap leach component closer to surface. And so instead of moving you're going to have to move that overburden, but instead of putting it in the waste pile, if you could heap leach some of that and recover some gold, that would obviously help. So looking for potential improvement in strip ratio at Oculto from some of the heap leach studies that are underway now. But at Jack, there's a number of benefits for Jack. Strip ratios, absolutely one of the key ones. All of Jack is flat lying, and it all starts at about 50, 60 meters downhole depth. So very, very shallow, and it's free dig material. So it's unconsolidated colluvium is the overburden there. So you just literally dig it away. Whereas at Oculto, you have to drill and blast the overburden. So a lot more costly there. And so, yeah, you could look to start mining at Jack, much less strip ratio, much more favorable, and you get into higher grades. So the Jack discovery has really been very transformational for us. And again, all of those numbers will be coming out in the weeks and months ahead here as we announce the resource and we announce the pre-feasibility study. And we're obviously really looking forward to those.
Right, right. And that's exactly the forward-looking statements that I was talking about here. We don't know for sure what these numbers are going to be. So this is, for people listening, take this basically as a good feeling, basically. Yeah, a little bit better than that, I guess. But so anyways, you also have, so that's Diablillos, basically. You have a couple of other projects. You have the La Coipita. There's also two other projects there. They have, what's the general plan with those? I mean, it seems like to me like you have your hands full with two good discoveries here. You have economic studies coming up, a whole lot of paperwork for Oculto and Jack. And so are those other properties, are they for sale now? Or are you looking for a partner? What's the plan here?
Yeah, so La Coipita is the secondary project we have. That's the main secondary asset within the company. So there, I mean, we found a great opportunity of consolidating a huge land package, and that's in the San Juan province of Argentina. So right in the heart of sort of I'd say one of the best copper districts out there. And so we acquired 70,000 hectares, is like 700 kilometers squared. It's a huge property there with multiple targets. And so we consolidated that a couple years ago, and we've done some selective drilling there. And so you mentioned some of the results. Last year, we drilled 2 deep holes. We hit 226 meters of about 0.4% copper equivalent there in that second hole. And then this year, we drilled another deep hole. That came back with 700 meters of mineralization, but it was lower grade than we would have liked. I mean, it was closer to 0.2% copper equivalent there. So look, there's huge potential. I mean, there's literally potential here for, potential target could be like 1 billion ton porphyry, a massive porphyry. But yeah, we have our hands full. And so we're evaluating opportunities right now of bringing in a major partner that can help fund the advancement of that La Coipita. So they would fund the exploration campaign, and we'd likely maintain a minority interest over time.
Oh, well, that's an interesting thing. When do you expect more details or news on that?
Yeah, I mean, these things always take months. So yeah, early on in 2024, I'd say we could expect. And so that is located up in the San Juan province where drilling is seasonal. And so right now, there's no drilling there, of course. And their summer season kind of starts in January, February. And so, ahead of that, ahead of the next exploration season, we want to have a partner, because then obviously they would be doing the drilling next year, early next year.
Of course. Okay. And that's La Coipita. Then 2024 would also be moving towards FS, I assume, for Diablillos.
A bankable feasibility study, correct?
Okay.
And really testing still some of these other targets. And so we will now have Jack and Oculto in that pre-feasibility study. But we think there's other Jack-like zones out there that, again, have had minimal drilling historically. And so for us next year, it's another, exploration campaign ahead of us that could produce a number of high-quality targets. And so our team's evaluating that at Diablillos. Where should we focus on drilling? We have this Jack North target, Phantasma, Alpaca. All of those show significant potential, and we're just waiting on some final drill results. So we've drilled each of those 3 targets with 2 holes each, waiting for those drill results to come in. We expect those will come in before the end of September, and that will obviously give us a much better indication. Obviously, we want to know what the grades of these initial drill holes are like, and then we can plan out prioritize those targets.
Well, but why move towards a bankable feasibility study if you think you're going to find more in the other targets? And if you're not necessarily rushing to sell at these prices, why not wait before you have a whole lot more to put in that bankable feasibility study?
Sure. So we would not publish the bankable feasibility study until we have drilled these other targets. So it's similar to like what we've been doing this year with the pre-fees. We waited, of course, to include Jack. I mean, so we've been drilling at Jack, but we've been advancing this pre-fees now, I mean, for 12 months. And so the work is ongoing. You do the metallurgical test work, you do the more detailed engineering. All of that is ongoing. And so that's similar to the bankable feasibility study. We'd be doing more detailed engineering. We'd be, costing a lot of these things in a lot more detail. And so that work will be ongoing. But yeah, of course, if we have a significant discovery or two in some of these other zones, we would wait to finalize the feasibility study until we have, until we have those targets drilled out, and we can include those in that final study.
Thank you for the clarification there. That does make a whole lot more sense now. Let's see what else. What about the Chilean projects? As I mentioned at the beginning, you still have them, but you're not doing much on them. What's the plan with them?
Well, that's quite a dormant project, I would say, for now. And so there again, we have a very large land package, and that's in the Antofagasta province of Chile. We had Rio Tinto as a partner there. They drilled a couple of holes into that, I think 4 or 5 holes. None of them really hit significant copper mineralization. And so they backed out of that partnership. And so we're left with this big land package. So we wholly own 100% of it. It doesn't really cost us much. And so that's been fully paid for. So we just hold on to that for now. Over time, we could look into maybe spinning off some of these projects to our shareholders. And so, yeah, it's always nice to have projects there in your back pocket, but we're not paying really much attention to that. We have our hands full at Diablillos and obviously La Coipita as well. We're looking to attract a partner right now. Yeah, we're open to partnering Arcus as well, but we're not really actively working on that right now, I would say.
So it sounds to me like you're happy with what you've got right now, what you have achieved so far. Rightfully so. 2 great discoveries up in Argentina. You're not worried about the jurisdiction at all. You have money to keep on doing some of these things. You're waiting for a better market to do a bigger drill program. So it just sounds to me like you're positive. And obviously, with the stock market being where it's at, especially the junior resource stocks being where they're at, your stock is about 30% cheaper since late last year. So to me, if I were as confident as you, like if I was seeing the things from your angle, that would obviously sound like a good buying opportunity to me. But I don't see too many insiders buying in the open market. Why is that?
Well, I made a big purchase several months ago. So I exercised over 2 million options. So paid for those options and held on to all those shares. So my share ownership increased by over 2 million shares recently. I mean, that was only a few months ago. And so, yeah, for me personally, look, I'm fully invested in this. I mean, this is by far my largest holding out there. It's a huge portion of my net worth. I hold personally over 5 million shares in the company. And so I'm fully invested already. Obviously, if I win the lottery and have sort of windfall additional proceeds, you'd see some very aggressive buying here at these prices. I would love to be able to afford more shares. But yeah, just realistically, I'm fully invested into this company. And it's the same with Dave O'Connor, our chief geologist, and a number of our board members as well. We each have, stakes that are very high percentage of our personal net worths. And, I mean, clearly happy holding on, waiting for higher prices there.
It's a good point. Because when you open up a SEDI filing, your eyes normally directly go to, open market buys or sells. Oftentimes it could be better if your money, if you buy your shares basically in the primary market, meaning your money goes directly in the company, because you're not only getting shares and you're aligning yourself closer to shareholders, but your money can actually be used for drilling as well. So that's a good point that you make there. The CFO did trim quite a good portion of his investments, so selling in the open market between 37 and 39 cents, if I'm not mistaken. Why is that? What's happening?
So I think that was on the back of the option exercise. And so when you buy options, I mean, you obviously have to pay for them. And so you sell some, like typically you'll sell some shares to help pay for the options. And then you also have to pay tax in Canada on the entire amount. So even on the portion you hold. So for me, I held all of it. So I funded out of my pocket the purchase price. And then on top of that, even though I didn't sell anything, I had to foot the bill for taxes, and the taxes could be significant, obviously. And so, typically when you see an option exercise, you'll see a bit of selling, and that's normally to help fund taxes, help fund some of the purchase price there. And so, yeah, I think that coincided with that. And so, yeah, I don't want to talk about his personal financial matters, but yeah, typically when you see some selling around an option exercise, I think it's safe to assume the proceeds are being, not put in your pocket, but are being used to pay for the proceeds of exercising options and then paying a tax bill, so going to the government.
Well, not many people are buying silver stocks in the open market right now, which is it's an interesting place to me to think about, because gold and silver have gone up. I mean, gold specifically have gone up in price quite a lot. Silver not as much, but it's still at a good spot. It's not at a horrible spot. $25, not a horrible spot for silver. But a lot of things have changed as well, right? The whole environment of operating a company have changed. Costs have changed. Inflation, as we discussed, and all these things. How are you finding I mean, I suppose you talk to investors all the time. How are you finding this market right now? Like, is it seem to you like it's turning? Is the sentiment in the people that you're talking to turning, or is it still in the doldrums?
Yeah. So it really depends on the type of investor, I'd say. And so I'd say, some of the conferences I've attended recently have been more geared towards retail investors. And I'd say for retail investors, it's much easier, I'd say, like for the astute ones, they understand the difference between the value and the price, I'd say. And so they're not out there chasing momentum. They're not looking to make trades. They'll look for longer term investments. And I think for us, that's clearly sort of the key value driver here for us, is we're looking to create value at this project over many years. And so we've been quite successful here, expanding the resource, de-risking this project, moving it forward. Unfortunately, it's not reflected in the share price, but that's really what creates an opportunity. So for somebody who's able to buy and hold, looking out for longer term horizons, I'd say they see great value in us and many of our peers. I mean, again, as you mentioned, it's the entire sector has been severely discounted here. But yeah, it creates an opportunity where you see some companies that have added a tremendous amount of value. The share price has gone flat. I mean, clearly, those are the types of opportunities as an investor I think you want to pay more attention to, and obviously do more diligence on your own, see if it's the right investment for yourself or not. And so there's those types of investors. Obviously, the momentum investors are not in the sector at all at the moment, I would say. There has not been huge amount of momentum driven or technical traders. And those are typically your shorter term, coming in, looking to make a trade and sell within a couple of days or weeks. That audience is not in the sector, I'd say, at all at this stage. But yeah, you'd see them get involved as momentum picks up. That's when you typically they add fuel to the fire as to after things eventually turn around.
What do you think is going to bring them back? That crowd. What does it take to? Is it company specific, or do you think it's really at the mercy of the market?
No, it's at the mercy of the market for sure. I'd say higher gold prices are number one. I mean, if you see gold prices hit a new all-time high, so well above $2,000, which we're not that far away from, 5 or 10% away from an all-time high currently. But yeah, if you see gold sort of break out, lead the way, I think that would result likely in people then starting to look at silver. Then you can see silver really start moving. And then that's when people will, start deploying cash into the miners, into the explorers. And that's what we've seen many cycles. So it's not going to be different this time around. It's a matter of timing. When is that going to come is anyone's guess. But for us, I mean, we're just continuing to look longer term. How do we continue to grow this project, de-risk it, add as much value as possible? And then eventually when things turn around, obviously we'll be extremely well positioned.
Let's maybe talk about that last thing that you said, continuing to de-risk the project. That's sort of one of my favorite questions to add towards the end of a conversation is asking what keeps you up at night. I mean, obviously you're the CEO of the company. You're here to talk to me positively about it and trying to bounce off any hard balls that I might have. But what are the risks? What keeps you up at night?
Yeah. I'd say for us, so mostly for junior explorers, it's much higher risk, of course, than having cash flow coming in from a mine. But for us, I mean, we're in a fortunate position of being backstopped, that we already know we have a valuable project here. So we had a PEA study done on just the one deposit, Oculto, which showed very robust economics. We've now added a second deposit. And so we know our valuation is really going to be backstopped here. And so, what keeps me up at night is macro factors. Obviously, if silver prices continue to languish here for much longer than expected, then we won't be able, I'd say, to drill as much as we would like in 2024. But yeah, it's largely out of my control, obviously. So, I tend not to pay too much attention to those things. In terms of project specific, really, it's a significant number of opportunities ahead of us here. We're prioritizing, those opportunities. So making sure we're drilling the next best deposit. And so, that's, a lot of work is going on behind the scenes there from our exploration team, ranking the top targets that we have here. And making sure we're just continuing to put the money to the best use possible when when we're drilling the next campaign.
But so project specific, I guess there must be something that if you had a magic stick, you would turn around, you would wave it at that thing, and you would make it go away, or you would change it. What's one of those things?
Yeah, I mean, threats for the project, I honestly, I don't see very many out there. I mean, we have a large, robust project, very good grades, good tonnage here. We had a 16-year mine life. Now that's going to be extended even beyond that. In Argentina, once you have a bankable feasibility study completed, then you get a stability agreement with the government. And so that locks in your taxes, your royalty rates. And so that's another benefit as well. And so, yeah, I mean, there's obviously just a bunch of, steps here towards ultimately de-risking this project, making it sort of construction ready. But I don't see any of them as being insurmountable. So, I just want to make sure this team stays focused on, advancing the permitting, for instance, I mean, which we've been doing. And so, yeah, no, we're very, very well positioned, and I don't see any risks that I would point out specific to this project.
Well, can you talk to me a little bit more about that stability agreement with the Argentine government? How does that work?
Yeah. So that's when you're ready to eventually start construction. Before bringing in all that cash into the country. One of the benefits in Argentina is that you enter into a long-term stability agreement, which is for 30 years. So that really locks in, because as any jurisdiction, I mean, you could have a change of elections over a long mine life. You don't want a future administration coming in and all of a sudden introducing a windfall tax or a huge increase in royalties. So that once you have that stability agreement in place, if taxes fall, you benefit from that, but you're capped. So you're capped at the tax rate at that time, the royalty rate at that time. And so that's what gives these companies confidence to come in and invest hundreds of millions of dollars and actually build projects. That's what we've seen on the copper side. That's what we've seen, again, even on the precious metal side in Argentina with various mines. And of course, we're seeing that on the lithium side as well. So there's a lot of money flowing into Argentina, building these projects. And that's because you have the benefit of stability agreements in place, et cetera.
That's an interesting 30 years is a long period, of course. And with everything happening in some of the neighbors there, it comes as a benefit, I suppose. So I think I've gone through most stuff that I wanted to go through. I see that we're at sort of I don't want to waste all of your day, of course. So I think I'm all out of questions. What is something that you came here hoping to talk about, but I'm failing to bring up?
Look, this was very, very thorough. Excellent. Thank you for having me back. Look, I just want to, again, reiterate, I mean, we have a number of catalysts coming out. So there's, a resource estimate coming out in the near term here, a pre-feasibility study, which we're really looking forward to. And then obviously a lot more drilling ahead of us here with a number of exploration targets. So yeah, no, continue to keep us on your radar and continue to stay tuned, I'd say, as we continue to make progress here.
Thank you so much, John. I'm going to put up some contact information on the screen right now for people watching or listening that they can reach out to you if they have any further questions, or feel free to put them down below in the comments. And next time when I sit down with John, assuming that he would want to look at my face again, we can target those. But John, thank you so much for investing your time with me, sir.
Would be very happy to come back anytime. Thank you.